a big rally on Nvidia, helping the market push to new highs, slamming right into the upper boundary of the rising wedge that we looked at this weekend. Nvidia plans to invest up to $100 billion in OpenAI. Remember, we just had that news about Nvidia investing in Intel. Now, back at that, we get this, and that has allowed the market to make new all-time highs. The Dow was up 66 points, up 0.14%. By the way, I'm sorry I didn't post on Sunday. I was sick over the weekend, if you can't tell. I'm still recovering, so I apologize for that. If I sound a little raspy, I apologize. The S&P was up 0.44% to the 6,700 area. Look at that. I'll show you on the weekly chart where that's coming in. NASDAQ was up 0.70%. The Russell was up 0.73%. The VIX was actually up 4.25%, just over 4.25%, close above 16. Nvidia rallied up, back up to major resistance. Rallied up 3.90%, just under 4%. Rallied up, tagged the upper Bollinger Band, and turned off of it ever so slightly. But we've moved just a fraction, just a couple of pennies above this high. Remember, this earnings candle right here was 1 penny below that, and this is at major resistance. And then now we're up here slamming up against it with a powerful rally today. Look at that bar. Wow. That helped the NASDAQ. That helped the S&P 500. Meanwhile, Bitcoin is selling off. The market's about to follow Bitcoin. Powell speak tomorrow. Very well could be a catalyst for the sell-off. Starts walking back, hopes of of more rate cuts. We have a one and done with the rate cut until the Fed panics. The other rate cuts start getting taken off the table. If we see an improvement in the labor market, if we see inflation tick back up. Now, even with the rally with Nvidia, again, it's still stalling at major resistance. We continue to hit this resistance level ever since summer of 2024, and it continues to act as resistance. I think a large broadening formation is forming. I have the trend line here from these lows, slightly breached it right here, parallel to the upper boundary here, and we slammed right into that level back in June of 2024. I'll blow this area up for you so you can see. Just quickly, take a look at Nvidia. Again, I believe this trend line is going to mark a top for Nvidia. We hit it in June 2024, fell just shy of it here at the peak here in late 2024. Then again here, January of 2025, we went down to the April low, and now we're back up at this trend line. We stalled just underneath it, just by a fraction right here. We failed to reach the trend line. We can have an expanded flat correction for wave 4. If we reach it, then the risk is the market's topping, Nvidia's topping, and we top surrounding this trend line, and we have a 1, a 2, a 3, a 4 right here, and a 5. The 4 was only 11.25%. And that we slam into this level, and then that's it. It's over. Personally, I believe the fourth quarter is going to be very good. I think we're going to sell off into the earnings. I think we're going to get improvement with the jobs report. We're going to get the inflation data this week. I think Powell's going to speak tomorrow. We'll see if he ends up rattling markets a little bit, starting to walk back the possibility, I should say, of more cuts. He came off the hawkish side. They still said, oh yeah, we're going to pencil in 2 cuts with the dot plot, 2 more cuts, but yet he was concerned about stagflation at the press conference. I'll see Powell start showing concerns and reluctant to commit to more cuts. You start walking back dovish expectations of more cuts. I think that it could be a one and done. And if we get another cut out of the Fed, I think you're going to see inflation tick higher. I think you're going to see the jobs market improve. Those cuts could be taken off the table. We'll see what happens. I still think you're getting a post-Fed sell-off. We're already seeing it start with Bitcoin. Bitcoin's already lost 5% since the Fed meeting. For 5%. So Nvidia, the risk is we top right here, right now. My guess is you have a larger expanded flat. An expanded flat, we went slightly above this level. So even if you come up here, you can still get an expanded flat. You go above this high, but then you come back down, you take out this low, and maybe we don't go this deep, maybe we do, maybe we just go a little bit lower, but I still think you could see a rally going into the fourth quarter, into December, to complete a broadening formation. The risk is that we complete it right here, right now, sooner rather than later on Nvidia, on the NASDAQ, that we top out sooner rather than later. Nvidia moved just pennies above this previous peak from August. If we have an expanded flat, you have a 3-3-5 pattern, which would be an A, a B, and a C, followed by another A, B, and a C. And you go slightly above this high, so we still could go higher with Nvidia, and then you come back down and you take out the low. That's an expanded flat. You take out the previous high, but then you come back down and you take out the previous low. Wave 4 can be an expanded flat with a 3-3-5 pattern as I've marked right here. We still have a larger broadening formation. If wave 3 completed over here, we have an expanded flat. We could still come down towards the 200 period moving average here, and you've got a 3-3-5 pattern where you've got 3, 3, and maybe it's not done yet. Maybe we go a little higher, and then you get the 5, and you come back down towards the 200 period moving average, or to it, or at least towards it under this level. And then we'll be watching, does this play out? I do think the fourth quarter is going to be good. We have gone, we've had the rally, and then since August, we've gone sideways. We've dropped 11.25%. We've rallied back up to the high, and again, you've gone nowhere. It does look like a possible expanded flat. Broadening formation in the daily, I've shown it to you in the weekly. Here it is on the weekly chart of NASDAQ. If we end up selling off and we come back up, again, this trend line could mark a top. If we end up seeing evidence of a top, then NASDAQ could have a peak with a 1, 2, 3, 4, and then a 5 up in this area. Same thing I talked about with Nvidia. I still think we're going to sell off. The risk now of a government shutdown, it looks like that good chance that might happen. Markets get rattled about that, and they end up resolving it. Remember in 2011, S&P ended up dropping 21% surrounding a potential government shutdown that I believe ended up it happened, got resolved, but that was something that rattled markets. Also see the 10-year yield soar, longer-term yield soar. No, the Fed's cutting on the shorter end, causing the Fed to second guess themselves. And I've talked about that at great length and detail over the weekend. This broadening formation on NASDAQ, you got the broadening formation on Nvidia. Now, again, we're hitting this trend line, so again, we could see a reaction off of it and still move back to our 20, our 50-week moving average, or the blue line, which is the previous high from the February peak. Here it is on the daily chart. So either we're completing a topping process right here, right now, slamming up into this area, or we pull back and get one more push into it in the fourth quarter surrounding earnings kicking off here in October. And we sell off into earnings. Massive broadening formation, likely forming a topping process here for NASDAQ. Got a shot that it's completing here. More likely, though, it's not yet done if we have on Nvidia an expanded flat. Continue to monitor Fed Fund futures. The betting market's still betting we're going to get a cut in October, 89.8%, 73% in December. Get 2 more quarter point cuts. If we see the labor market improve, if we see the inflation data tick up, and it's likely we're going to see the labor market improve, then the probabilities could drop. Does Powell begin to start sounding hawkish, or having reservations about cuts? We got a hawkish cut out of the Fed, no doubt about that, because Powell at the press conference was speaking about a weakening economy and rising inflation. That's the risk of stagflation. I'll be watching the betting markets here. I'll be watching, does this change after Powell talks tomorrow? Does it change as we get the jobs report next week, the inflation data later this week? We'll be watching. Tomorrow, we're going to have, on Tuesday, the 23rd, we're going to have Powell speaking during the market session, 12:30 p.m. Eastern Time during the session. So pay attention to that. We'll see what happens. The S&P slamming up into the upper boundary of the rising wedge off of the September low. Bitcoin already broke down from it. You could see my video on that at the end of this one. Look, the trend line on Sunday, and then today we have a drop. Last time I looked at Bitcoin, it was down about 2.5%. I'll be watching, getting all kinds of reversal signals for Bitcoin, all kinds of sell signals. Thursday, we'll get the third estimate for GDP. We got a lot of Fed speakers this week. We have the PCE inflation data this Friday. We've got the jobs report next Friday. This coming Friday, though, Fed's favorite gauge of inflation. It comes in hot, the market could sell off. The jobs report next week comes in stronger than expected, the markets could sell off. Reason for the Fed lowering rates is, they're concerned about the labor market. Well, if the labor market's improving, why do they need to keep cutting? Year over year headline inflation for PCE is supposed to come in at 2.7. It was at 2.6. The core is supposed to hold steady at 2.9, previously at 2.9. If this number comes in hot, that could be a catalyst for the sell-off, especially if Powell underlines that they're watching the inflation data and they're watching the labor market, which he very well could do. He addressed that in the press conference. Again, you're going to see the market join Bitcoin and get a post-Fed sell-off. We're just going up and slamming up into the trend line again. A rising wedge on the S&P and slamming up into the trend line. Broadening formation on the NASDAQ. It's already dumping. The signals are all turning back to bearish. If you want to watch my latest Bitcoin video, I'll link it at the end of this one. The markets rallied with Bitcoin in September. Bitcoin terminated the rally with the Fed, starting a post-Fed sell-off. We haven't started it yet with the S&P. We've got Powell speaking tomorrow. Started it with NASDAQ or S&P. We've got Powell speaking tomorrow. Probably say something to rattle the markets. Last Thursday, on the 5-minute chart, we had that bull flag pattern. I talked about it. We ended up going higher on Friday. We gapped down at the open here, filled the gap. It was a gap and trap on the 5-minute chart. We had a divergence here that gave us a pullback to the 20. More pullbacks to the 20 period here, just slightly breaching it by the close, forming another divergence here. But this rally has taken us up to the trend line of resistance I talked about in the weekend video. The 5-minute chart didn't drop below the 200 period, and we didn't drop below the 50 period here on the 15-minute chart. You can still go up and hit these trend lines. Again, the trend line right here with the trend line touches this high here and this high here, slightly excluding that peak. We moved up to that level, stalled, pulled back, and then we went to the red trend line, which includes the shadow right here, and we halted right there, forming a little divergence on the 15-minute chart right here. Multiple point diversions with our September rally. Bitcoin has already terminated the September rally. The market is going to follow Bitcoin, all likelihood. You had a period of decoupling. Bitcoin got a peak in August and peak in July and August. You had bigger sell-offs with Bitcoin, smaller sell-offs in the market with the S&P and the NASDAQ. Yeah, in August, NASDAQ ended up dropping 4.28%. S&P dropped 2.25%, but not to the same degree that we saw the sell-off with Bitcoin. Likely about to play catch-up. But our rising wedge here on the S&P or on the S&P 500, we slammed up right into that red trend line, including the shadow today. You're forming this multiple point divergence, and that completed the divergence on the MACD. We had one over here with the Fed, and it only gave us a sell-off back to the 200 period moving average. I've excluded the shadow, and you still have a rising wedge here. So again, Bitcoin's already getting the post-Fed sell-off. You're likely going to see it with the S&P 500, and probably divergence is going to play out with something Powell's going to say tomorrow. Again, whether he's walking back the rate cuts, whether he starts taking an even more hawkish tone or expressing concerns about tariffs or inflation, getting uncertainty with the Fed meeting right here. Then we go higher with options expiration, as I said, with the Fed meeting. Sometimes you get a post-Fed sell-off, whether it is Thursday or Friday right after the Fed meeting, your fingerprints aren't on it, or whether you go into the following week, still likely going to get the post-Fed sell-off. Bitcoin is already doing it. Bitcoin has already lost 5%. The markets, the traditional markets, are going to follow Bitcoin's lead, as Bitcoin is the leader of the pack. We're slamming up into this trend line, but guess what? S&P's moving to new highs. Guess what? VIX isn't moving to new lows. You've got a compression pattern building on the VIX with bullish divergence on the RSI and the MACD. Now we're getting confirmation of a higher low. This is exactly what happened before the February sell-off. I showed you the chart over the weekend. The MACD is right here at the center line. We're already back into positive territory on the RSI above 50, okay? And the positive region above 50. You're right here above the 50 period. We closed above the 50 period moving average today. Great Scott, did you hear what I just said? We closed above the 50 period moving average today. We got a candle of indecision. If we have a continuation pattern with that candlestick, you're going to see the S&P turn off of the trend line of the rising wedge. You're going to see a surge in volatility, probably surrounding Powell. If we turn off that trend line, Powell in his speech tomorrow. When you hold above the 50 period moving average on the VIX, bad things happen on the S&P 500. You've got the compression pattern you're about to break out. I've excluded the shadows here. And if we get a breakout holding above our 50 period moving average, the 10 and 20 coming back up now, getting above the 50, the 10 has gotten back above the 50 period moving average, or back above the 20, I'm sorry, the 10 and 20 getting back above the 50, the green line's at 50, the red is a 10, the blue is a 20. If you get, which the 10 is crossed back above the 20, if you get the 10 and 20 getting back above the 50, you get a breakout, you get a holding of the VIX holding above 50, you get a breakout of this pattern, then you're going to have a huge sell-off. We've had the compression pattern, and we've had the tightening of the bands, telling us something big is going to happen. But so far, in the summer, we got the sell-off in July. From the July peak, we got a couple of sell-offs in August, but it hasn't changed the signals. You got a 4.28% sell-off on the NASDAQ, 2.25% on the S&P, but it hasn't changed the signals. The signals initially on the S&P had turned bearish with this move. They reverted right back to bullish. My signals remain bullish. But this is telling us something big is likely going to happen. There's a discrepancy. The stock market's moving to a new high. We're not making a new low. And we got that hollow red candlestick last week on Thursday. I warned you about this last week and over the weekend. You've got a hollow red candlestick, and that is likely going to mark a bottom for the VIX. Volatility is likely going to start surging. You're going to get a post-Fed sell-off. Had to get past options expiration. It could happen surrounding it, ahead of it, or with it. It could spill over into this week just after it, but you're still going to get a post-Fed sell-off. The rate cut's already been priced in. Have potentially two more. I think the Powell and the boys at the Fed over there are going to start walking it back. Especially if we start seeing improvements in the labor market, inflation ticking back up. The stochastic turning back up. You've got the MACD just under the center line right here, just right underneath it. And if you start seeing that go into positive territory, holding above the 50 level with their doji, and it's a continuation doji, okay, then the hollow red candlestick can play out. If we try to rally with Powell, you could try to fill the gap here. We already did it. We did not do it. That would be coming back down here to the low here of the close, and that would be in the 10 to 20 period moving average if we drop back below. But again, be paying attention to the MACD on the VIX. Again, hold above 50, you hold above, you get above the center line there, then you're going to see the VIX begin to take off. Last week I talked to you about this diversion on the 4-hour chart. We had one on Bitcoin, we had one on the S&P and NASDAQ. Bitcoin, it's already playing out. Many futures here of the S&P 500, you had this divergence, went into options expiration. Now you're going up and slamming up into the upper boundary of the trend line for the rising wedge. You got a divergence, you pushed a little higher, and just after options expiration, same thing for the NASDAQ. And again, this is the rally since the September low. Bitcoin has already terminated the rally. Another reference point of a divergence, both the MACD and the Awesome Oscillator both have it. If we get red bars this week on the Awesome Oscillator, it's a NASDAQ daily chart. Signals remain bullish. September rally. And at the lows of the session, we actually had a red bar with the E-mini futures of the S&P in the daily time frame. Then we gapped lower, started to get it on the S&P. It went away. because we had a gap and trap on the intraday charts. If we start dropping below the 10 and 20 period moving average, getting a bearish reversal of conditions, you'll likely see, if we start turning down, you'll probably see a red bar. We could see it tomorrow. It did show up today, and again, with that multiple point divergence on the S&P. This is the S&P daily right here. Meanwhile, the VIX, the MACD, is just a fraction. It's got a reading, it's just a fraction under the center line. It's got a reading of 0.008. Barely under that center line. Again, and we closed above the 50 period getting a candle of indecision. If it's a continuation candle and you get above this level, again, could something happen to rattle the markets tomorrow? Could it be Powell? Could it be something else? Powell start walking back and sounding uncommitted to further cuts, second guessing himself? We'll see what happens. Awesome oscillators going into positive territory here on the VIX. I'm telling you, we got the hello red candlestick. I'm showing you in this video. Be paying attention to what's going on with the VIX. It's suggesting something's getting ready to happen. But we're slamming into some resistance levels, rising wedge pattern. Bitcoin turned down off of it. Go watch my video on Bitcoin. Bitcoin slammed right into it just like S&P, and it turned right off of it. Now it's dropped over 5% from the high, from turning down off of it in just a couple of days. Had the post-Fed sell-off with Bitcoin going to get bigger. Bitcoin's going much lower. I think it's going to have a great fourth quarter, and you're going to see the same thing with the stock market. I talked about the trend lines being tested here. I talked about forming a larger divergence if we continue the rally to slam up into this level, if we bounced off the 50 period moving average here. And again, with the rally on Friday, we already had a divergence on the 60-minute chart, but it wasn't done yet. And we went higher. And again, now you have this multiple point divergence slamming up into the trend line of that rising wedge here. Here's our 60-minute chart. You've got the same divergences going on down here on the MACD and the RSI, just like what we're seeing on the 15-minute chart. There's a rising wedge on the 30-minute chart. Now my trend line moved on me. So I love these charts, but sometimes you hit save and the trend lines move on you. It drives me nuts. Beautiful charts. Nevertheless, again, you've got this rising wedge. You've got these divergences going on. We'll be watching to see, do we start selling off with Powell? S&P going back up and flirting with the upper Bollinger Band again. We got divergences still in play, but no reversal. We'll see if it joins Bitcoin, which is likely going to be the case. The S&P now hitting the 6,700 area, which means we pull back. We're still likely going to go higher than that if we don't end up topping right here, right now, which is possible, but I think less likely. The trend lines here, this is the parallel boundary up here. I think that we're going to end up reaching this level. We're not there yet. Here, I've drawn the trend line from the 2022 high. Previously, I excluded the shadow and connected it with the peak over here in December. To include the shadow, it intersects with this upper boundary, which is where we're likely headed, probably going to pull back before we reach it. This is a log scaling on the S&P. Similar to that target is the linear scaling, our long-term trend line from the 2020 bottom. The 2020 bottom and the trend line there, along with horizontal support, is where we hit at the April low. Now we've come up to the 2023 trend line. We're exceeding it, and we're coming to this 2018 trend line from the 2018 peak to the 2022 high. That angle is the black line, and we're slamming up into that area. It looks like we're moving just slightly above it. I have the blue trend line and the red trend line, which are parallel to the lower boundary from the 2020 low. One includes the shadow, is the red trend line to this low. The other excludes it. We're still not at the red trend line. I think we're likely going to pull back and then move towards it in the fourth quarter and probably see a top. So again, just the trend lines, and again, the 6,700 level. So that probably means we're going to go above that after the next pullback. Signals still remain bullish. My signals remain bullish. We're hitting the upper boundary of the rising wedge in the 15-minute time frame. On the 60-minute chart, the 30-minute chart, we still have negative divergences. Haven't played out. Signals remain bullish. Signals on Bitcoin, they're turning bearish. The market's likely going to follow suit. Signals have been consistently bullish since the bottom, turning bearish in July, early August. Others, few, turned bearish in August but reverted right back to bullish. NASDAQ had signals in both July and early August there and mid-August. Signals remain bullish. NASDAQ had ended up dropping 4.28%. We saw signals revert back to bullish in August, but they turned back to bullish after that. So we've had two times where signals have turned bearish. They're back to bullish right now. In order to have a sell-off, my signals have to turn back to bearish. Slamming up into the upper boundary of the rising wedge in the S&P. We're slamming up into the upper boundary of the broadening formation on the NASDAQ. So there is risk of a major top. I think it's more likely you're going to sell off going into earnings season and have a really good fourth quarter, produce a top in either the fourth quarter or early on in the first quarter of 2026. Same thing here. Signals turned bearish at the end of July there, early August, reverted right back to bullish. And again, most of my signals have remained bullish after turning back to bullish in early August for the S&P. A few of them turned bearish for a second time, but signals have continued to remain bullish. NASDAQ, we saw signals turn bearish after the July 31st peak in early August, and then turned back to bullish, and then turned right back to bearish, dropping 4.28%. 4.28%. Sorry, my throat is still raspy. I was sick over the weekend, still recovering. Sorry about that. See if the market decides to join a Bitcoin. Do we end up getting a sell-off with Powell tomorrow?